Hi. Let's learn about agency bonds. An agency bond is a security issued by a government-sponsored enterprise or by a federal government department other than the U.S. Treasury. Some are not fully guaranteed in the same way that U.S. Treasury and municipal bonds are. An agency bond is also known as agency debt. Most agency bonds pay a semi-annual fixed coupon. They are sold in a variety of increments, generally with a minimum investment level of $10,000 for the first increment and $5,000 for additional increments. Some agency bonds have fixed coupon rates while others have floating rates. The interest rates on floating rate agency bonds are periodically adjusted according to the movement of a benchmark rate, such as LIBOR. Like all bonds, agency bonds have interest rate risks. That is, a bond investor may buy bonds only to find that interest rates rise. The real spending power of the bond is less than it was. The investor could have made more money by waiting for a higher interest rate to kick in. Naturally, this risk is greater for long-term bond prices. There are two types of agency bonds, including federal government agency bonds and government-sponsored enterprise bonds. Federal government agency bonds are issued by the Federal Housing Administration, FHA, Small Business Administration, SBA, and the Government National Mortgage Association, GNMA. GNMAs are commonly issued as mortgage pass-through securities. Government-sponsored enterprise bonds are issued by entities such as the Federal National Mortgage Association, Fannie Mae, Federal Home Loan Mortgage, Freddie Mac, Federal Farm Credit Banks Funding Corporation, and the Federal Home Loan Bank. The interest from most, but not all, agency bonds is exempt from local and state taxes. Farmer Mac, Freddie Mac, and Fannie Mae agency bonds are fully taxable. Agency bonds, when bought at a discount, may subject investors to capital gains taxes when they are sold or redeemed. Tennessee Valley Authority, Federal Home Loan Banks, and Federal Farm Credit Banks agency bonds are exempt from local and state taxes. Here are three key takeaways. 1. Federal government agency bonds and government-sponsored enterprise bonds pay slightly higher interest than U.S. Treasury bonds. 2. Most, but not all, are exempt from state and local taxes. 3. Like any bonds, they have interest rate risks. Hope this would help. Thanks for watching.